Welcome to BullTheory Project.
Welcome to BullTheory Project. Today we got a lot to talk about. Our outlook for what we think is going to happen for this quarter, the overall price action of the S&P 500. This week we have CPI, we also have PPI. The following week after that we have the Federal Reserve meeting. PPI and CPI is very, very important because it's going to determine how many rate cuts we get for the rest of this year, right? Typically, if you're seeing hot inflation data, the market can get, kind of scared, and they'll say, okay, we're only going to get a certain number of cuts. That's why it's important to understand what's going to happen with the economic data to correctly gauge how the Fed is going to make their next steps. And so we are expecting most likely the Federal Reserve to switch to a more easing environment from QT to QE. Basic explanation of QT and QE is QT is a reduction of the Federal Reserve's balance sheet. QE is when they're adding to their balance sheet. What we want to see for the CPI, we want to see 0.2% on the month over month, and we want to see 2.7 on the year over year for CPI. If it's bearish, we're going to see 0.4 on the month over month, and we're also going to see maybe 2.9 to 3.1% on the year over year CPI. In my personal opinion, I think that Jerome Powell is going to be a lot more dovish than people are thinking. I think the market is currently pricing in 100% chance of a 0.25 cut, but they're also not pricing in the dovish tone of Jerome Powell. We're most likely going to see the cuts. Everyone's going to say it's going to be a selling news event, but what could happen after that is we actually pump. I know it's kind of like a pumpulations, like, we're always going to pump. No. I'm telling you something right now. Every single day that we spend in the month of September, the lower and lower probability of a market correction right now. And a lot of people are calling for market correction. A lot of people are saying it's going to be a selling news event. Powell's going to come out neutral. He's not going to be dovish. He's going to be slightly hawkish because, stagflation, CPI is going to come out hot. And hey, CPI can come out hot. That could be terrible for our markets.
Probably won't.
But it most likely won't, because I think July was a very unique circumstance where we saw a lot of the tariff numbers run through at one time, but most likely for August it's not going to be that same way. So anyways, just long story short, just keep in mind we're having the CPI, we're having the PPI. It's very important to understand this. Maybe clear out some junk trade. SUI, you're trading PayPay on 100x leverage. Maybe don't trade PayPay on 100x leverage. Maybe don't trade Dogcoin on 100x leverage right now. But what you want to do is you want to prepare yourself for very, very volatile moments, but you also want to be able to capture the upside in case we start to pump and go crazy.
Keep your main bags, obviously, guys. We're saying don't have yourself in a spot where your liquidation is so close where you can get wicked out because Jerome Powell says, hello there, and then you see the
hello, good afternoon.
We all see the memes, and
good afternoon, and it goes down 20%.
It could wick you, and then it wicks back up. So one thing I want to say really quick is that when you're listening to like me and Caleb or just any other YouTuber or just any channel about the market, I want to encourage you guys to keep in mind that you have to build your own thesis and build your own knowledge of the market. And by that I mean a lot of times we'll depend on other people, and you'll see that happens with the market. So an example, don't quote me on this, but in 2020 or 2021, Elon, I forget which year, but Elon called the top. He said, I think we're going into a crazy recession, blah, blah, blah. And, we did see him sell off, and it did go down a lot. And there was a huge correction in Bitcoin, but then Bitcoin surged back up, and then altcoins went crazy, and a lot of people made multi millions during that time. And a lot of people listened to Elon just thinking because he had credibility, and basically they were like, hey, this guy's smart, right? He has $1 billion. He's not studying the market like you are going to be, like me and Caleb are. He's actually just a billionaire that knows probably some macroeconomics. Yeah, he's a very smart person. He's running 5-6 companies, multi-billion-dollar companies. So you see that and you think, this guy knows what he's talking about. I need to sell. And sometimes you guys will be, and me and Caleb included, will listen to other people and actually kind of go against our actual thesis and our trading strategy that we put forth years before. So just make sure you are confident in yourself and you're not using other people's opinions to change your mind. Maybe use other people's opinions to either validate it or cross-reference your opinion. If you do need to change your trading strategy, then maybe, you can hear an opinion and be like, okay, that this person's saying the market's going to crash. Let me make sure I'm on the right track. So I just want to throw that out there. Constantly look to disprove your theory, but also be confident in it. So you want to cross-reference it. You want to look at the charts. You want to make sure you're not being stupid, but don't let other people's opinions change your mind too much. Right now, hopefully you guys are actually at the spot where this is validating your thesis. You're not listening to me and Caleb like, yeah, the market's going to go up and a really good CPI report and everything's going to happen. No, do the research so you can see, oh, I see why they're saying this. Don't just blindly listen, turn it on, and then follow what we're saying. That's just a quick little tip on your trading mindset, and don't fall for the trap of thinking other people that are billionaires know what they're talking about, because sometimes they're actually just thinking of their business and they're too busy and they're not actually in the charts.
So I'm going to build off that a little bit. So a lot of people don't know how to do critical thinking when it comes to macroeconomic analysis and price action. Some people are only like, oh, as soon as it breaks the support, it's over, it's done, we're going down the 50 MA, the bear market's here. And some people are like, oh, we're going to get quantitative easing, so it has to go up, we're going to go into a super cycle. The main way to differentiate and how to combine these things, pay very close attention to how the price action behaves before and after the news. You can build your thesis off of those two things.
And Caleb actually made a very good point a few days ago. We were talking. I'm very, very strong on this opinion. When there's a macro event happening when it comes to the economic calendar, let's say there's a CPI report, Powell speaking, let's say there's jobs data, whatever is going on, and you know the business economy is looking at this piece of data and they're like waiting. Don't look at the chart. It could do something crazy, throw it out the window and basically mark it as kind of like trash. It's trash. At that point, you can't trade it because you don't know, like I said earlier, you don't know if someone coughs wrong, what's going to happen to that chart. So like Caleb was saying, kind of take more so before and after, maybe that middle during when he was speaking. You'll see some crazy sell-offs, some crazy run-ups, and you'll see actual charts breaking. You'll take a simple rule like, I thought if a candle went up 3 times in a row, it wasn't supposed to go up. Well, you know, you're trying to take a rule and fit it in during a speech, and maybe it's going up like crazy because people are gambling, they're getting excited, and Powell, they think he sounds more bullish than they thought he was going to sound. And then as soon as he's done, you'll see it crash. So you'll end up buying the top, and you'll see the market recover and go back to what it's supposed to be doing. So that's a good point that Caleb had, is that basically I'm rewording it as like, just throw out that middle part, it's junk. And that's why we're saying clear your Pepe longs, clear your dog shit coin, whatever.
Clear your World Liberty Financial 50x leverage.
Don't do it, guys.
Now there's a third factor, right? Combining macroeconomic data with the price action, and you're able to go through your chart and see, okay, what happened at each specific point of the macroeconomic announcement or the news, and how did the price action behave. Then you get your historical data. And what happens to some people is they get very, very confused. They say, oh, because this event happened at this time, in this quarter, and this seasonality, therefore it has to happen the exact same way. A lot of times actually happens is the seasonality is directionally correct, but it's not all the way to a T perfect 100%. Example, August 2025, right? So a lot of people are saying September correction, right? Right now, we got a correction of around 12 to 13% on Bitcoin even before September came around. So my base case is that the September correction already happened, but maybe it just happened 30 days before.
But listen to what he said carefully. He said September correction. It's not a September correction. It's the seasonality and the timing was off a little bit. Market is throwing people off.
Market shift. And that's what normally happens to a lot of traders. They think September's here, it has to go down, we're going to zero. Or November is here, we're going to go to the moon. Sometimes it doesn't happen like that. Sometimes it could be September pumps, August dumps. Sometimes it could be October dumps, November pumps. And there's so many different things that can happen. You have to pay attention to both of those factors.
Yeah, both of those factors. A lot of times also you have reality confirmation bias. That's what I call it, where your reality is confirmed and then you switch it. So there's another thing Caleb was saying. We were talking about like, hey, talk about, oh, the November pump. We were looking at the chart. Really, actually, the first half of November pumped. It was like the first
8 days.
And then it wasn't even, and then it actually went down. So because people said November pumps, and then as it was pumping for the first 8 to 10 days, everyone thinks in their head, no, November was pumping the whole time. It wasn't. It wasn't pumping the whole time. So you have to actually go back and research and look at the charts. Don't just hear these things and be like, sell in May, go away. Dude, look at the charts. It's like 55% chance that you're gonna have a down month in May. So that's one example. And then also another example is the seasonality, the whole seasonality thing. Don't fall into the trap of just blindly going based off seasonality, because I hate to say it, everyone always says it, but history tends to rhyme, not repeat.
Not exactly
so
repeat.
The whole point is what Caleb was talking about, the September dip. It most likely already happened. That's why that's our base case. So that's a really good point to remember. Don't fall for the traps of this has to happen because this person said it and because of seasonality here. What I'm trying to say is Ben Cohen is wrong.
Yeah, Ben Cohen is wrong. And also too, that's pretty much what we're trying to say is that there's a specific subsection of the YouTube crypto community that thinks that Ethereum has to go to the bull market support band because that's what always happens in September. Ooh, September.
Ooh.
It could happen. Sure. Okay.
If this happens, though,
but what I will tell you guys is that
$1,000.
is that I personally, I do think the Bitcoin dominance trade is played out. I think if Bitcoin dominance does actually start to reverse slightly, we are getting a little bit of MAC divergence on the Bitcoin dominance chart. If we do actually start to see a little bit of signs of reversal, it's most likely going to be short-lived. It's not going to be a full-on reversal where we get a 67% Bitcoin dominance chart, because that would actually be saying this time is different. Guys, what I want to tell you right now is that there is a very, very specific line in trading that you're most likely not ever supposed to say. Is that never say this time is different. They just get so confused in their head. There's so many different indicators. They'll say this RSI on this chart is pointing to a bearish reversal pattern. But what they can't understand is that if it is not in confluence with the general market pattern, most likely there's an 80 to 90% chance you'll be wrong. So say for instance this, I'm a bull. I don't think there's going to be a super cycle this cycle, because I can't see that happening, because most of the time
that would be saying this time is different.
That would be example of saying this time is different. And on the contrary, a lot of people are saying altcoin season is going to happen. It's not going to happen. That would be another example of saying this time is different. So guess what? Remember I told you guys I was going to add more to the Cardano trade? I added more to the Cardano trade. I added more to the Cardano trade because I don't think this time is different. I think this time is exactly the same, but directionally. That's the key. Not the same time frame, not the same price, but maybe directionally, this time is the same, because I don't have to sell Cardano at the exact same month that it topped previously. Maybe Cardano tops in the first couple of weeks in November. I don't know when it's going to happen, and anyone who tells you they know when exactly something's going to happen, they're most likely wrong. Okay, and so all you need to know is the direction. You just need to be directionally correct in your trades to be able to to be able to execute. Sorry.
I don't want to butt in, but I want to say this before I lost my train of thought. The reason this time is not different, the three things: you have your day trading, you have your swing trading, you have your macro trading. Okay, eventually the market will crash. That actually means this time is not different. We have huge crashes like the Great Depression. We have huge crashes like in the 80s. We have the dot-com bubble. We have 2008. There's gonna be a big crash. I get it, guys. So now let's go from that to the next step. When you're swing trading, you shouldn't anticipate that big crash all the time, because you're dealing with a certain amount of months. You're dealing with 1, 2, 3 months. So don't keep saying, but what if the dot-com bubble comes right now at this moment? Well, guess what? We already have a plan for that. We already know the bubble might burst soon, but we're trading this last push. Okay, that's our plan. The 18.6-year cycle is the plan, and we're coming up to it. But don't live in fear when you're swing trading. And then the day trading, some people think that's gambling, but you can still catch some good day trades. The reason this time seems different to some people is they'll get jumbled up in each part. Let's say you're in 2008 or 2007 and you're like, how does this keep going up? But you didn't have any hedge or any thought that, okay, what if we're at a bubble because things have been going up? Because me and Caleb right now, we do know the market's hot. We do know it's going high. We do know there is a chance that the market could crash at any moment. So if it did happen, we wouldn't say, what just happened? That's where people get confused, where they'll mix their swing trading with the macro trends, and they forget there's a big bear that actually might come and get you. And the other thing I want to talk about, usually things aren't different when we go back to just why things keep repeatedly playing out the same is because humans aren't different. Yes, we do micro evolve as humans. We get smarter and we learn from history. But the reason people say, again, history tends to rhyme, not repeat, is because we're kind of learning as a human species, but we keep doing the same thing because our brain keeps thinking the same way.
Each and every monthly candle, each and every weekly candle is conglomerate of decisions.
Yes.
That's what you can think of a candlestick. That's all you have to think. You don't have to think of, oh, what is this? What is that? Oh, the candle is the close, the body.
And that works more for macro candles.
That's for macro candles.
Not the day
for
trading.
Intraday, that's
you don't
like,
know what's happening.
No, you don't know. I don't know what that shit is. Okay. Anyways, if you're looking at the QQQ, if you're looking at the Dow Jones monthly candles, you can just think of it as a conglomerate of human decisions, all in a very concentrated place, which is the New York Stock Exchange, okay? That's all you gotta think about it as. You realize it's all just human psychology, and how can I play off of this human psychology to be able to actually succeed in trading?
I'm getting a little mad right now. I'm getting a little mad. The next time you people out there think you're not smart enough to trade, and you're not smart enough to get this thing down in a macro way, not day trading, I'm talking about I'm gonna invest and I'm gonna make money. The next time you doubt yourself and you think you can't do it, I want you to look at all the people on YouTube, all the people around the world that are rich and they're dumb, okay? Just remember, there's dumb rich people, and it's not even about investing. I'm actually talking about believing in yourself to make money. Because a lot of times you guys are stifling yourself. You're like, I can't do this. I don't know if I could do this. Get that mindset out of your head right now, because I know what you're thinking, because I've thought it too, and it still comes up sometimes. You're like, what am I to say that I'm right? Why am I saying that this is gonna happen? You're not saying you're right. You're not saying this is gonna happen. You're just following a trend. That's it. You're actually saying history is right. So the next time you doubt yourself, throw that out the window and remember, you're following history, not following some crazy self-prophecy that you made up. You literally saw Bitcoin has a cycle. We're at the tail end of the cycle. I'm investing in altcoins because usually they pump. Stop being stupid.